Shreyas Devalkar, the Senior Fund Manager Equity at Axis Mutual Fund, is joining us. They're actually launching a fresh NFO, which is the Axis Consumption Fund. It starts on 23rd of August, is open till 6th of September. And perhaps, if you want, you could be looking at investing into this fund if you're convinced about the story. But let's begin the conversation with Shreyas and understand. Shreyas, Nifty FMCG index is actually at life high levels. Is this really a right time to perhaps come up with a consumption fund, or you're not concerned about valuations at all?
See, actually in the market, most of the indices are, or most of the stocks are at their premium valuations, and they are at their peak valuations per se. Barring actually, if you look at the re-rating which has happened across the board, so it has happened across the board. It is like consumer durable companies, let's say capital goods companies. Capital good companies, it has seen re-rating of almost 2.2 times from pre-COVID level. EMS services has seen 2.3 times. Specialty chemical has seen 1.5 times. So absolutely, definitely, most of the pockets of the Indian market are absolutely expensive. Here, what we have to look at it, what is relatively expensive. And if you look at in that context, then consumer staples valuation compared to its pre-COVID level has gone up by 1.3 times. Auto industry is 1.4 times compared to its pre-COVID level. So we have to look at what is the relatively better when it comes to the valuation, and one should look at in that context, especially at this level of markets.
Shreyas, Somit also joining into the conversation. I was going through your PPT. I could see hotels and resort as a part of the consumption broad theme that you have included. But why not aviation? Isn't that also a part of the consumption? And that is one sector which has been seeing strong demand and good financial performance from the existing companies.
So everything would be there in that. So if you look at the construct of it, so general perception is consumption is only about FMCG, while it is not. So it includes even auto industry, it includes two-wheeler, four-wheeler industry, it includes consumer services, which has e-commerce, then hotels, and what you're talking about, airlines. It has gems jewelry and paint, consumer electronics, telecom, hospital, power. Even it has power utility distribution, because one of the highest growing segment is that, and real estate. So it is a combination of both cyclicals and non-cyclical.
Okay, so but what's the differentiation factor or USP then versus any other large cap fund? Because obviously there are these whole host of sectors that you're looking at perhaps tapping into. What differentiates you, or what's the strategy that you're gonna deploy to pick up the right stocks within this vertical?
Yeah, it's a great question, considering that the only difference, the main difference is the financial services. So if you see any large cap oriented funds, which may be diversified fund or only large cap category fund, then the financial services is the large part of it. But when it comes to the consumption theme, financial services is not part of that 80% of the consumption theme. So that is a key differentiator, and obviously it will not have companies which are into capital goods and other B2B segments per se. So this is those are the other differentiators.
When it comes to consumption, there's a clear division between urban and rural. So, will you be focusing on those companies that are more tilted towards urban, or companies which are more tilted towards rural?
Definitely focusing on both, whichever is doing good as of the time when the fund gets deployed. The point is, if you see urban India or upper part of K, what we talk about in most of these segments, that has been doing well for last many years, and that those companies you have seen, they have delivered good returns also in the stock market. When it comes to the semi-urban or rural India, or maybe lower part of K, either ways you would like to look at it. I'll just give you one example of, say, two-wheeler industry. So the two-wheeler industry has given us great return in last 1.5 year, despite there is no talk about the rural India doing good, or probably the lower income level class not doing good. The point is that every segment in the consumption can come up or may come up because of its cyclical nature. So in two-wheeler, it may be because of replacement cycle. So such things keep on happening. So it is not only about rural versus urban or upper part or lower part of K. It is across the board. There are opportunities. There is propensity for many cycles to come back if actually the revenue has not grown for last multiple years. So again, I'm coming back to two-wheeler industry. Probably they achieved their peak volume in 2018, 17, 18, somewhere around that time of period. Now it is almost 6 to 7 years, and now it is coming back. So cyclically, multiple sectors can come up, which are actually catering to the rural India or semi-urban India.
Well, Shreyas, thank you for joining us and giving us all those details about this new NFO which has opened for subscription.
If you like this video, then like, share and subscribe to ET Now.